Hi everybody, and welcome to the first review for the simulation for BUS 330. So round one is complete, and I'm happy to say just about every team did fantastic. What we're looking for in every round is to score about 400 points, and if you get an average of 400 points per round, you'll get a full credit for this assignment. Now, if we look at net profits per team, we had a couple teams here, Team 12 and Team 28, with the highest amounts of net profits. So we have a number of teams above the $55 million mark excuse me, of net profits, which is fantastic. We have some teams down here that had net profits, but not as high as everybody else. So this just shows you can do a lot better in net profits. Okay, if we look at points per team, our points leader with an astonishing 1,097 points is Team 31. So, if you see, Team 31 also is pretty high in profits. So when you're high in profits, you're gonna earn a lot of points. So Team 37 came in second. So having 1,000 points the first round is really fantastic, and it's really the only round you can score easily 1,000 points. The other rounds get a lot tougher. And remember, your goal is to earn about 400 points per round. That's what you're shooting for. So now what's great about the simulation, even if our lowest ranking team still made over 400 points, so they met their goal, or maybe this team had the least amount of points, but they still over 400, they met the goal, and next round will be a little bit easier for you because you're competing not only against all the other players in the simulation, but against yourself to beat last year's points. Okay. Stock price, we could see we all started at $5 per share, and we can see a big drift between 16 and $18 per share. So that's a pretty nice improvement. Team 16 with $9.87 per share. So it's almost a $9 difference, and we have Team 12 in first place, followed by Team 23 and Team 10. All very nice showings in the stock price. Total sales, we have the leader in sales is Team 35, followed by Team 32 and Team 14, all about $250 million in sales. And keep in mind that number one in sales doesn't mean number one in points or profits. It's easy to become number one in sales, but you want to make sure you're selling your products at profitable rates. And if you look at earnings per share, number one is Team 12, followed by Team 23. There's another team here, Team 10, Team 37, 31, 14, 28, all did very well in earnings per share. Okay, so let's take a second here. Okay, so let's take a look. You're in round 2 now, or Y-2. So here is a sample company. This is Johnny Lawrence's company from Cobra Kai at yahoo.com. So let's see what they did, what mistakes they made in the first round, and how to improve upon it in the second round. So this is the part of the video where, I did the review of the results, and now I'm going to give you some helpful hints and tips on how to move forward into round 2. So remember that you should fill out your mission statement and your team cooperation here. So here in the team cooperation, if there's someone in your team not participating, you can document it here. So you could say week 1, and then list the people who participated. Oops, I spelled that wrong. Okay, so here you can put the people who participated in each week and kind of keep a record of who's working on the simulation with you, because some team members may not participate, and there's not too much you can do about it except document it. And the more documented evidence you have of them not participating, the more I can confront them at the end of the simulation about their participation, and also take points away from them if they didn't participate in the team. It also helps if you have if you do on the group area in Blackboard, if you do a discussion board, or you send emails, and you can document their proof of non-participation. That all helps me to build a case to remove their grade from the team competition at the end of the simulation. You also should fill out the mission statement as well as, of course, your names and emails. Then you move into the overview. Okay, so this is your first overview. You get in round 2, and here you see that this team got 720 points. So what was some good successes, some problems? Okay, so revenue went from $12 a share to $22 a share, 82% increase, so I got 82 points. Quick ratio, debt ratio improved, 44 points. How do you improve your quick and debt ratios? Well, you reduce your debt. Let's see. Profit margins went from 40 to 48%. Operating profit margins went from 23 to 29%, and net profits went from 16 to 20%. So those are all areas that earned points. Points were lost in the total asset turnover, and this is common because as I'm building the company and I'm buying more assets, it's going to be difficult to have my sales grow faster than my assets. The equity multiplier increased, so I'm building equity in the company. My return on equity increased, so the profits of the company are growing quicker than the equity. My earnings per share increased. Now, increased 135%, but I think 100 points is the most I can earn in any category. Return on assets were up 15%. Again, when you're building the company, return on assets and total asset turnover are going to be hard to make a lot of points in. So I'm coming off a year here where market capitalization is the stock price. So my stock price went up 200%. I earned 100 points there. And if I look at my book value per share, which is just assets minus liabilities divided by outstanding shares, I get my book value per share went up 65%. And my forecasting was horrible because year 0 management was terrible. So my forecasting actually improved. So I earned a nice amount of points. That's one of the reasons you can earn a lot more points in round 1 is because you're coming off some bad results in round 0. I had my operational investments. I had 100 points there, but I had this deficit. I had a $23 million deficit when I was expecting a surplus. So what happened there? And I lost 100 points, which I could have made. I could have made 100 points, so my score would have been 920 if I didn't have this unexpected cash deficit. And that always comes from the fact that I have unsold vehicles. So if you see any inventory, this means that these vehicles were not sold. I over forecasted, and this put me in a position where I had unsold inventory. Okay, back to the overview. So that's the overview. Now, you should fill out these reflective observations on each page. Once you do the first round of reflective observations, a lot of them will stick and you can just modify them for the next round. Some of them that don't stick, you have to rewrite. So this is an important part of the simulation, and you have 5 team members, and there's not a huge amount of work each week to do the simulation. So I'm expecting that these reflective observations are going to be done. Don't worry if you forgot to do them in year 1. I won't take any points off, and you can start to do them in year 2, and that will be fine. Now, a further way to look at your results is you get this assessment. So I got 4 out of 5 stars for revenue, and it tells me my score is 22. My percentile rank is 65%, and this is against the last 5,000 teams that played the simulation. So I'm doing better than 50% of the last 5,000 teams. My performance is above average, and then I get tailored results here on how to improve this character score. So it also gives me a written information button, gives me information on how to improve my results. So my total asset turnover was low, and it gives me some information here on how to improve the total asset turnover. And in this class, you're going to be learning about net profit margins, total asset turnover, return on assets, return on equity, cash management. A lot of this will happen in Chapter 3, but this is why the simulation is important to the class, because it's giving you experience in areas where you don't have experience. I doubt any of you were a CFO of a company or a vice president of a company in finance, that this gives you a chance to operate a company from a financial perspective and utilize a lot of stuff we're learning in our class and see it in action in this simulation to give you a point of reference. Okay, the charts we already went over, but your specific chart you may want to look at is your team performance chart. So this shows how you did round over round. And what's most important is this chart down here, which shows the blue is your market potential and the yellow is your sales. So I met all of my market potential, and that's why I had some unsold cars, because I made too many cars, but at least I was able to sell every car to someone who wanted one. But the danger of overproducing cars is that unexpected deficit, which we saw already. Okay, so now we have the industry, where in the industry I can look at my results and I can see for each company in here. So if you scroll through, you will see each company. And if you want to find your company fast, you can hit the find button. And this is Team 41. So I could okay. All right, so I can just quickly go to Team 41. And these are my personal results, and but you can check out any other team and see how other teams performed and what they did. It's market research, and this is true in the real world. If you want to look at how did Ford, GM, Tesla, Toyota, Honda do last year, you can go to their financial statements and in their annual reports, and you can get all the same data about how they built their cars, what their sales is, what their profits were, earnings per share. It's all available in public data. So this is similar to what you could do in the real world. You can review your results. Now we also have the financials here. So in chapter 3, we're going to go over basics of income statement and balance sheet. And chapter 3 or 4, we're going to start looking at the statement of cash flow. And this also has your ratios backed up, your overview performance on your ratios. So that's good to review that. And then we get back into round 2, Y2, we have the sales, and now the customer expectations have increased. So customers are expecting more. The importance factors have stayed the same, so that hasn't changed, but the customers are now expecting more. And I do have, because I made investments in operational investments, I was able to make an optional cost reduction here. So basically, if I put in, it would cost me $3,500 to have a fuel economy of 28. I get a $600 credit, so now it's only $2,900. So this helps to reduce the cost of your car and increase your profit margins. So as I'm building the car, I want to improve against last round's characteristics. So I want to make my car better, and I'm going to increase my sale price because I want to get this profit margin up between 3 to 5%. So here I have it up 4%, so I could play around with it a little bit. Okay, I got this up a decent amount here. It's about at least 7-8%. Now, for the forecasted sales, like I've shown before, I'm going to scroll down, and here is, remember, if you forget your login, click here. If you forget your username and password, you can click here. And here you can get your student manual at the bottom. There's also a button for support. So in the student manual, like I explained before, I'm going to go to the forecasting area, and I'm going to look at year 2, and these are the forecasted average forecast for year 2, meaning this is what an average car company would sell. So if you're above average, you'll sell more. If you're below average, you'll sell less. And if other car companies fail to produce enough cars, you will also pick up their excess demand. So this is just a guideline starting point, and so you have to decide where you want to go from there. Get back to the other tab. Okay. All right. Let me center this. Okay. So going back up, I'm going to put this at 2,700. Now moving into sedan. So same thing for sedan. I'm going to try to build a better car than last round. And I do get these warnings. There are certain minimums I have to meet for the car to be functional. Okay, so I was able to get up only 2% increase here. So I was able to get 3%. So I'm going to need more operational investments, I can tell already, to keep this. I don't want to really lower this one too much. This one I will lower. Okay, so I'm going to leave it at the 52. So this I need to do better. I need more operational investments. And this is what you need to, you do need to fill out these reflective observations on the sales page as well. So let me do the next car, the truck. And okay, and again, I got this up 3%. So I'm going to Okay, so now I was able to get it up 6%. So it's always important to improve those profit margins every round. So every round your sales should go up, your sales forecast, and your profit margins. Even if you have to build a car that's not as desirable, I'm pulling back on the forecast a little bit to recognize the car is not the best in the industry, but I still want to have that increased profit margins, which are important. So I'm going to go ahead and improve the luxury features since it's the most important. Okay, so now I'm able to get to that 5%, which is my goal, and I'm going to forecast my car. Okay. Then I'm going to go to the marketing area, which the marketing area takes a while to complete. So I'm going to do that off camera and then go into the production area. So I'm in the marketing area, and I'm just going to say these targets here don't really change anything. It's not going to help you or go against you in any way. These are just part of the role play, and they're connected to the reflective observations. So when you write about your overall, what is your demographic and advertising strategy, that ties back to your target and your age income, about who you're going to try and sell these cars to. So this advertising area does need to be filled out for each of the vehicles, and you have enough information for your introduction to business course to do this area. Maybe someone in the team has taken the marketing principles, and that can help you as well in completing this. And you see last round I didn't put money in some of the categories, and that hurt my demand, so now I'm spreading out my categories a little bit, and I gotta do that for every car. Okay, now I'm in production, and I'm going to see that I don't need a new production plant for economy, so I'm not going to buy one. And I'm going to try, you always want to make your excess or shortage 0, so you never want that to be any number other than 0. So I see 2438. I'm going to put that in there. So this is exactly what I need to produce, because I can reuse my inventory for last year, repurpose it, and resell them. So, and I know that I need to increase my operational investments, and I have to write about my capacity utilization. Look at the user manual to learn about what capacity utilization is, and it's basically, am I utilizing the factory that I bought? So, meaning that I don't want to buy, if I buy 2 more production plants, I have a capacity of 5,000, but I'm only building 24,000 cars. That's going to give me a low percentage of utilization, which is bad. It's a waste of money, it's a waste of space and time. So that's why you only buy the production plants as you need them. And then as far as your operational investments, what's your strategy for increasing your operational investments and how much are you spending? Okay, so the sedan, I'm going to have to buy a new production plant, and this is my build, and again I'm going to increase my operational investments here. And then I'm going to don't need a plant for truck, and I'm going to increase my operational investments here. And then I do need a production plant for my luxury. Increase my operational investments here. So each car has their own reflective observations to answer, and they give you the formula for capacity utilization here: production units divided by total unit capacity. So now we're going to go into the finance page. Okay, so at the very bottom I'm going to see so I only have $11 million surplus. I'm going to borrow some money to make sure I don't have another deficit. At the same time, I'm going to buy back some stock just to see what happens when I do that. Okay, so now my surplus is 17 million, which I think is enough. So when you're doing here, are the pro forma financial statements reflective of my strategic plans, and how is your company's strategic decisions to improve your car's sales, cash output, net profits this round? So basically, this is sort of an important reflective observations reflecting about the financial decision and management of the company. So for the pro formas, do they reflect my strategy? Yes, because my strategy is to increase my profits. So I'm increasing, if I look at my income statement, I'm increasing my net profits. I'm doubling my net profits. I'm increasing my sales by 100,000, and I'm managing a cash surplus. the pro forma, so it's reflective of my strategy, and it's gonna, so this is, so you do a short write-up here. Now, the pro forma we're going to learn about in chapter 3, and this is all about making an estimate of where my financial statements will be if my forecasts are true. If my forecasts from the sales page are not accurate or not true, then I won't sell all the cars that I have forecasted. I won't develop the profits that I forecasted, and therefore I may have a cash deficit, and that's why you see those unexpected cash deficits when you don't meet your forecasts. You don't meet the forecast that you set on the first sales page, because that's what's used to build every decision you made in sales, marketing, and production. That's what's building your pro forma financial statements, which means this is what next year's financial statement should look like. But if you don't sell every car that you forecasted, if you over forecast, it won't look like the pro forma because you have an inaccurate forecast. So that's really the big challenge here. Okay, now if at any point that you see you have a very big surplus, you may want to go back into production and buy more reflective observations, or maybe pay down or retire some funds. But generally in round 2, it's too early to really retire any funds. I'm just retiring stock now just to see what's going to happen. And again, what I'm doing here is just giving you some hints and help and an overview of how I would fill out round 2. It's not to say you should copy me exactly, because I'm not really spending a huge amount of time on this strategy. I'm just kind of walking you through the paces, giving you some ideas, and answering some commonly asked questions about the simulation. Okay, so I'm going to complete year 2. And now I'm year 2. Now, if I ever wanted to go back in, I can always go back in and make some changes. And so that I can go back in, and if I want to make some changes to the sales page, I can do that. And I just have to resave it at the bottom. But whenever you make changes, it always makes sense to go back to the finance page, give it one more look, and complete the round again to get those changes uploaded. And remember, don't leave a page open for more than 45 minutes or an hour. I think the page will time out and you'll lose all your data. So make sure that if it takes you a while to fill this out, fill it out on a piece of paper or an Excel spreadsheet first, and then come back, refresh the page, sign in to enter the data in, so you don't lose your data by the time. If you take 2 hours to complete this page and then submit it, you might find that the data is timed out and you lose your data. So you do have a time limit per page. I think it's like an hour per page to have that filled out. Otherwise, like a regular website, it just kicks you out and you have to start over. So be careful of that. Okay, so I hope you find this video helpful. It explains the results for round 1 and gives you some hints and guidance in completing round 2. Best of luck, and I hope that we can continue with every team doing as well as we did last round. Thank you. Take care.